So, where do you expect the bond market to go over the rest of the year or the next few months?
Okay, the bond market is pretty interesting. I remember one time somebody did an analogy. If the stock market is the size of a baseball, the
Hmm.
bond market is the size of a basketball.
Hmm.
And so a lot of people, matter of fact, almost every day I do a report on the stock market and not the bond market.
Yeah.
And so a lot of people, including me, tend to talk more about the stock market, be more concerned about the stock market, even though the bond market is wildly important
Hmm.
across the board to all of us, to
Yeah.
pensions, to, almost all of us might have some bond exposure, right? And so, you look at bonds, and I've got a chart here I can show too. This is the Vanguard Total Bond Market ETF. It's the bellwether that we use as a benchmark, when we
Hmm.
look at
Yeah.
the overall U.S. bond market. Uh, and the bond market's so big. When you look at like the total stock market index, VTI, they own, I think, 98, 99% of the stocks. The bond market is so large and there's so many illiquid pieces of it. You
Yeah.
can't buy the whole bond market. But this is as close as it can get. I think it has 7,700 holdings or something like that. It's pretty high. So anyway, if you look at it, it's an amazing chart. Actually, doesn't look anything like the chart we were showing on the S&P
Hmm.
500.
No.
We had a massive run up that really started in 2019. I don't know if everybody remembers, but 2018, the end of the year, they were doing this tariffs on China. Going after China, tariffs, 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 and the market was falling. Right, it was down 20%, and the Fed was actually still raising rates at that time too. And then they finally realized what was happening, and at the very beginning, maybe even very end of 2018, they started to lower rates, and so we started to see, the bond market
Hmm.
goes the opposite direction in price
Yeah.
as rates come down. Well, that went all the way through, and then all of a sudden we had the pandemic,
Hmm.
and they lowered rates to zero. And so, what a massive run up! I mean, this is bonds, all right. They're not supposed to do this. Really, if the bond thing just went sideways and never changed, you're making your dividend,
Yeah.
right? And that's the money. To have appreciation on top of a dividend, that's what happened in that run up. So obviously that got unwound completely. That whole bubble burst
Hmm.
in 2022 as they were raising rates. And then we've been in this range bound thing for quite a while, right? Up until just really, a couple months ago, we've now broken out of that. So I expect that bonds will continue to do well here, and I think that there may be some money to be made here
Hmm.
also, because it's been a while since bonds have really kind of performed to the level that you would like.
Yeah.
Um, and when they lower rates, bonds do well, at least in terms of price. Your yield will continue to come down as new bonds are issued at these lower rates, but the price will move up for the older bonds. That's
Hmm.
kind of how the market adjusts based on these things. So I would think that the money in bonds. I mean, if you look at the last 12 months, man, you're probably talking about on a world bond basis, maybe 9% return versus looking at the world stock market across the board. I think VT, which is the Vanguard, total world, is up maybe 22%. So, the stock market has been still
Hmm.
wildly outperforming the
Yeah.
bond market. But there could be a good argument to be made here. Maybe not for shifting your stocks, but for into bonds, but for staying with the bond market
Hmm. Yeah.
and continuing to let your money grow there. I think there'll be some good growth that could come out of that arena here as we go forward. And the bond market likes recessions in the sense that's why people have bonds and stocks, because stocks would maybe struggle more in a recessionary environment. Whereas bonds, they're lowering rates in that environment to try to stimulate the economy, and the bond market can do quite well in that method also. So it's a good place.